when we say that even if it is for a short term, why rely more on machines rather than, kind of other kind of analysis where humans can also sit and assume that we are talking about humans who are sitting in front of the screen for 6.5 hours every day and doing some research by the end of the day. But still, why should these guys be looking at machines in order to pick up the stocks?
So, again, a good question. And you're right. When Warren Buffett started investing, technology was at a very different level. I think in the first instance, investors who made money on knowledge arbitrage. They knew things other people did not. Okay. Then as knowledge became, and insider trading became illegal and knowledge became more available, it became information and analytics arbitrage. If I had more information and I could analyze it better, then I could make more money than you can make. Okay. Today, there is so much information that you get buried in information. So it is, then it became, let's just call it attention arbitrage. If you could sit in front of the screen from 9 in the morning to 4 in the afternoon, then you could capture opportunities other people who went to the bathroom or went for lunch could not capture. But that is not really sustainable. How many people can do that? I know people who made good money doing that, and they found a job and they started working and they could only pay attention for 2 hours. And of course, you start losing money. And I think technology is beginning to create an answer. I mean, it's not a comparison, but SEBI listed, given SEBI information, is that 89% of people who day trade lose money.
Yeah.
Okay. If you go to angel broking, they will tell you that number is not 89%, it is 94%. So why do people keep coming back? They keep losing money, but they keep coming back. Now, but then if you analyze why do they lose money? They lose money either because they don't have the training. They don't understand charting patterns. They don't understand all the technical terminology, or they don't have access to research and information because you pay for a Bloomberg terminal is $30,000 a year. It's very expensive. People cannot afford that. Institutions can. But the most important thing was they did not have the time. Very few people have the discipline to sit in front of a screen and not take too many breaks from 9:15 in the morning when the market opens in India and 3:15 in the afternoon when the market closes. How many of us can do that? It's a very dull life, and after that, your head is kind of spinning. So people who do that do make money. But if you don't do that, then you don't. Now, machines can step in and do that. Machines can recognize patterns. Machines can generate recommendations. Machines can even actually do it for you. And when you start including bots with AI, then it becomes like a phenomenon, the example I gave of you're sitting in a self-driving car with Google Maps, So you don't know where to go, it actually takes you there. So that is where the technology is advancing. And I do think a lot of people will be able to benefit from that.